Yeah, so ultimately everyone always asks us, how do you find great growth companies if you've got the whole world to look at and you've got like 4 people? So ultimately there's 24,000 listed companies in the world with a market cap above $100 million. Within that, there's a whole bunch that profess to be growing. And they will grow because GDP is going to be better or it's going to be worse. And we would argue that we have no edge in what US GDP is going to be or whether China's slowing or decelerating. So we would argue that our view is as good as someone else's. So what we would look at is the companies that can grow regardless of the cycle. So something's happening which allows them to grow. And so let's just talk about Amazon, obviously. E-commerce is growing, we know that, and Amazon is growing share. So that would be a structural grower. E-commerce is roughly 11% of all commerce globally. It's probably going to get to about 40 to potentially 50%. So that is structural growth. And so that's what we're looking for. We're looking for companies that can grow no matter what and at the right price. And so from our point of view, we actually can shrink that universe down to around 800 stocks that can do that. And all those 800 stocks have essentially the same 5 characteristics. And those 5 characteristics we've generally found, and it's taken us years to work this out, quite frankly, is that they've got growth. So their top line's growing faster than GDP, and their total addressable market grows faster than GDP. And they're potentially growing share within that. 2, they've got economic leverage. So the leverage, their earnings have to grow faster than their revenue growth. 3, it's sustainable. It has to be sustainable. It has to be sustainable over a 3 to 5 year view. No different to smartphone penetration was 5 years ago, which drove Apple to where it is today. So it's a sustainable growth trend. 4, you have to have a controlling shareholder. We generally find controlling shareholders are very powerful, whether it's Steve Jobs, Jeff Bezos, or even in family-run companies in Italy and Ireland, like DeLonghi, for instance, in Italy. A controlling family shareholder can drive the vision, drive the product. And lastly, you have to have amazing customer perception scores. The best, you can only grow a product sustainably if it has great customer perception. And ultimately, all those things connect. The controlling shareholder is militant about the customer perception. The customer perception allows you to drive the sustainability, which gives you the growth and the leverage. And then the last thing we have to do is just find them at the right price. Customer perception, we use all sorts of different things. We generally look at user reviews. We track search data in Google to understand how much people are searching certain products. So a good example is many years ago, we did very well out of a company called Michael Kors that makes handbags in the US. This is not a core area of expertise for us. But ultimately, the Google search data showed us quite clearly that people were searching for handbags on an increasing basis. And you can pay for this subscription. You can obviously get trending searches in social media. You can pay for that as well. All of these companies sell the data back to you. And so that gives us good customer perception readings. And ultimately, it's also just essentially real-world observations. I think most of us could see that the iPhone was going to be big. And ultimately, the investment community is always last to work this out, not first. And so it's often just a case of keeping your eyes open.